Hello and welcome to the CNBC-TV18 special from the CNBC-TV18 Motilal Oswal studios. As markets continue to remain under pressure, the question most asked nowadays is, are we there yet? Are we at the bottom or close to this sell-off ending? And the sell-off has been quite painful. While the Nifty has lost about 16% in value from all-time highs, the small cap and the mid-cap indices have lost 25% and 21% respectively. While the market peaked in late September last year, the real vicious turn in sentiment firmly to the downside is only about 45 to 60 days old. Is it just a plain vanilla correction after a few years of absolutely go-go fantastic markets, or is there some deeper underlying malaise at play here?
And to help us with answers, we have with us in the studio Raamdeo Agrawal, who will be our guest editor for the hour.
Well, let's get the ball rolling then. Raamdeo ji, welcome to the show. Thank you very much. And always good to see you. Reassuring, and I think to our viewers as well, right?
Yeah.
Who always see you as someone who has seen lots of markets, lots of cycles, and
Yes.
I mean, they learn from you.
Yeah.
मुझे याद है हम 2 हफ्ते पहले हमारी बात हुई थी, आप बोल रहे थे जब पार्टी चलती है तो चलती रहती है, जब बंद हो जाती है then it is to restart it becomes very difficult.
टाइम लगता है.
So अभी कब कितनी देर बंद रहेगी पार्टी और पेन कितना है यहाँ पे?
या प्रशांत, ये थोड़ा अनयूजुअल टाइम है. हर समय every time it is a new story. That's the beauty of the market. Like 92 was the first shocker we had. First there was a upward move of 7x in 19 months, and then collapse, vertical collapse from 4200 to 2500. And the market started moving from 700 to 4200. Unprecedented in 19 months. So stories are always different. It was not backed up by earnings. It was just some kind of liquidity flow. 2000 Y2K boom. It was sectoral move, big time. Again it crashed by 50-60%. 2008 was again GFC crisis. The same 2003, 2008 build up and then crash. And every time the earnings are broken. This time, the market has moved from 500 rupees EPS to 1000 rupees EPS for Nifty. And market extended from, say, 8,000 at the bottom to 24, 25,000. So it went 3x. Earnings went double. So obviously, market got re-rated big time. Now we are correcting that re-rating because earnings profile is slowed down, but it is not broken. I mean, last year, the current year, the earnings are going to grow at about 5-6%. And there is obvious reason for credit slowdown, economic slowdown. Every aspect of tightening by the regulators have happened. And now, and there was the election, so there's a delay in the government expenditure and all. So all of this have passed. I mean, this is the year of actually all kinds of difficulties, I would say, in economy. And despite that, we are doing 6.5%. Don't forget that. And now we are exiting probably March quarter with closer to maybe 7.5%, 8%. Let's see what comes. So I think we have set the mood. One, correction is done. The P multiple, which was at 23, 24, that has come down to less than 20. And it is at below 10 years average. So nothing stops at the average. It overshoots a little bit. So that is what is on now. If market corrects further from here, it is overshooting downside. Okay. So that's what we are in right now. How long it is? See, as you said, the all-time high was in September. It is not even 6 months that market is correcting. So after 4 years of relentless rally, if we are there for 6 months out here, last year we made 50% in the market, broad market I'm saying, and we have lost say 20-25%. So I think it is painful. I understand it is painful to me also, but it is very, very logical. I mean, it's a proper healthy correction. If indices in small and mid had gone up by say 70-80%, they have fallen by 25-30%. And whose portfolio has done 70-80%, they have also fallen by 35-40%. So excesses in the market was very clearly visible. And regulator, government, worldwide investors, everybody was uncomfortable. So this is a very healthy correction. And now next year, earnings will pick up from 1,050 to maybe 1,150 or 1,200, whatever. And your IPO markets are now shut, almost like frozen. So one by one, right things are happening. Credit flow is improving. Government expenditure is picking up. So I think all the things are falling in place, and correction has also happened.
So just to complete that point, Nifty, anything more now is overshooting on the downside.
That
valuation wise.
I mean, I'm just looking at the averages.
What about?
I don't look at the forward. Nobody knows. We look at the last 10
Last
years.
10 years.
Last 10 years, average about 20, 20, 21, 20, 20 half P multiple. Now it is sub 20. So yes, can it go another percent, another
Absolutely.
one? It can. Overshooting can happen, yeah.
What about mid and small caps? Because there, Gautam Dugar from your team was with us, I think the previous Monday, and he was telling us mid caps trade at a certain discount to Nifty, small cap index discount to Nifty, and I mean there the gaps. These are
too much.
numbers as of last Friday,
So,
last Monday.
Yes.
Yeah.
So if you see today, in your money control, you can go and see 5-year, index performance. So index performance for Nifty is about 95, 96% up on a 5-year basis. On same 5-year basis, mid cap is up 177, 180%. So the gap is too much. If it was at about 100, 110, that I understand. So that excess gain, either large cap has to catch up to match mid cap, or mid cap has to keep correcting, time-wise or actual downfall. So I think the divergence between mid and small is too high. Let's see how the market does. Maybe mid will keep correcting and large will make a move, or large will make a move but mid will stay there, and then it will catch up. So market does its own stuff. I think most important thing is now, don't wait for because we are closer to the bottom. Now, whether it is 1,000 points away, 500 points, I have no idea. And let me tell you, nobody has any idea.
Yeah.
Okay. I have seen best of the chartists and all telling me, they're all eating their own stuff. So what I'm saying is, now this is a time, stocks are making bottoms. All the stocks will not make bottoms on the same day. Okay. So if you like certain stock, and that stock is available at your dreamy price, and it has gone below that, don't hesitate, start moving into the market. That would be my suggestion.
So tell us, if all stocks do not make a bottom at the same time, but some stocks today are perhaps at their bottom.
Yes.
Tell us, where is it that you see value right now?
That, I'm not at liberty to talk about the stocks. I do have some stocks in mind, but better we don't talk about it because I have an AMC and people are buying, selling and things like that. So, but it is very interesting. You see what the AMC managers are doing and what stocks they are picking. You can see it daily in your screen. So yes, there are stocks which are making bottom. They're holding rock solid at the bottom. And
what about quick commerce companies? You've
Yeah.
spoken about it in the past, about the structural opportunities,
yes.
the hype cycle in companies. So Zomato at 220 or a Swiggy at about 300 rupees. How do you feel about them?
Yeah, so that is one sector which is holding out very well. If you see, because see what is happening is, while price is where it is, it might have fallen 20-30% from the top, they are increasing value at very rapid pace. Price is here, okay, it has come down from here, but value is increasing very rapidly. So it is quite possible if it stays here for 3-4 months. See, if you are talking about investing, it's not about picking the absolute bottom prices. It's about buying at fair prices. Okay, are you buying a company which is growing at 50-60% at a fair valuation? My sense is that is one sector where there is a momentum, and momentum will pick up further, and it will become very interesting. There are not some 10-20 players, there are only 2-3 players, and others will find it difficult to enter. Of course, others will try as the pie becomes big.
Fair value for a quick commerce company?
I would think it's fair value. It is stabilized in the sense that, see, nobody can say that 5% can it move down from here. It can, but we are closer to the bottom, I'm saying.
Nobody rings a bell at the top or the bottom.
It's
so
completely
it's
for fraudsters, I'm telling you.
And by the way, you own all three in that space. So
You leave aside.
so you got full exposure in that sense, and you believe in that space. Other areas where you think, your own business, capital marketplace, and Navneet will join us in a bit from now.
Yes, he will talk about.
You've been a big champion of the space. You think
I still see. My sense is the story has changed for India and for the Indian businesses, Indian stock market. It's different. We are talking about 190 million demat accounts. Still in this down market also we are getting 2.5-3 million. You imagine if we are in the down we are getting 2.5 million customers. What will happen when the market actually picks up again? Again it will go to 4.5. So what I'm saying is this is relentless expansion of the market. You saw one of the hottest IPO markets. Right now it is shut. It's slight a bit of a slowdown is there. It will again come back. So market, there was see what happened was, when this money started flowing, almost 1 lakh crore per month, maybe 80,000, there was no supply of paper. There were no bankers. IPO market was shut. FIs were also, they were not selling initially. So the only FI supply was there. Everywhere else there was a demand. And then supply started 1.5 years back, 1 year back, IPO market, the QIPs, the promoters, everybody started selling. And now everything is stopping. There's no QIP, there's no IPO, there's no promoter selling that much. Okay, you will see a situation in 2-3 months' time when promoters will actually come to buy because they're the guys who are the smartest. They know the value of the company.
Correct.
So when the promoter starts buying, so actually you can't see that selectively in the companies, promoters will start buying. And those are companies to track.
Next 2 to 3 months, that your sense is that will start to happen.
Even from today, it will start happening.
You know, so you're saying the baseline for the market has shifted. I mean, basically,
So
it's a different
expansion,
market with
it is a much bigger game now.
Yeah.
200 million demat accounts going to 300 million in next 1 or 2 years. It's a much bigger game. So, you know, the irrationality which was there, where because of lack of supply, the irrationality in terms of pushing the stock price of multiples to 70, 80, 100, irrespective, that was wrong. So that will correct. Even that is behind, I'm telling you. It will correct. What has to be corrected will get corrected. I mean, whether it is called mid-cap or large cap or small cap, doesn't matter. What has to be corrected will get corrected. And what has to move up will also move up. So there will be divergence of performing stocks and non-performing stocks.
But just give us your own perspective on what's happening, because Nitin Kamath of Zerodha tweeted sometime back that volumes are down nearly 30%, and it's the first time in the last 15 years that their business has degrown. So from your perspective, tell us what's happening just right now.
Yeah, so see, capital market is as, you know, as the sentiments gets hurt in last 5-6 months, there is a decline, there are restrictive, say like from daily F&O, now you have come to weekly expiry. So obviously there is a almost 30-40% decline in the overall F&O volume. So we got expanded too much. Between 21 and 24, we got expanded too much, and then regulator got scared and they said, we want to contain it. And that's what they did. And effect of that is visible. I mean Nitin of course knows the books. You know, so that's what is happening in broking, that's what is happening in slowdown in. Now AMC flow was very good till last month. This month, I think there is somewhat, it is slower. It is somewhat slower. But are we done with that? I mean, that just 2 months is not the history nor the future. So I think IPO market will come back, your private equity will come back, your public markets will come back. Everything, once your correction is over, see, it has fallen very smoothly so far. It will recover very smoothly. So IPO markets will open up. In IPO also, all Tom, Dick and Harry, they were thinking of going public.
All that will get
That will
cleaned
also
out.
stop.
Yeah.
You know? So a lot of irrationality which was there prevailing just before this correction, that will be, the correction is the biggest what you call medicine for all the excesses. But nobody likes it.
Absolutely. Just to end this segment, and then we'll bring in Navneet here.
Yeah.
No, you're not seeing any sort of deeper sort of slowdown, structural slowdown or anything of that sort, right? I mean, it was just a cyclical kind of a slowdown, which should get fixed with government and RBI both kind of loosening a little bit. That's
See,
the view?
Governments want Viksit Bharat by 2047. So they want to grow at 8% real. And we are still at 6.5, 7. So, I mean, left, right, you know, we went a little slower. You know, they thought that we are going too fast, so they slowed it down. Now again, they'll get back to the track. So if we keep growing at about 7%, I am reasonably sure that corporate earnings will grow at about 11, 12, 13%. And my multiple is already reduced. So for me, at a market level, anywhere between 12 to 15% growth at index level, that looks to be possible in next 4-5 years from here.
Got it. Absolutely. You know, what we'll do, Raamdeo, is stay with us. You are our market editor, guest editor for the hour. So we're going to take a quick commercial break here. Navneet Munot, MD and CEO at HDFC AMC, has been listening in. Now we'll go straight to him after this quick break. And it's going to be one-on-one, Raamdeo ji and Navneet on the other side. Stay tuned. Welcome back. You're with us here on this market special. Are we there yet is the bigger, broader question, which Raamdeo ji sort of gave excellent nuanced responses to. But, you know, what we're going to do now from here on is get sort of individual sector specialists. So our first guest on the show is Navneet Munot, MD and CEO at HDFC AMC. Navneet, welcome to the program. Thank you very much. And you've been listening in keenly to the conversation with Raamdeo ji here. So Raamdeo ji, go ahead. I mean, Navneet, all yours.
Hi, Navneet. How are you?
Hi, good. Raamdeo ji, I would have preferred it the other way around, me asking questions to you.
Yeah.
But good to see you in this avatar as markets editor on CNBC.
Yeah. So, the biggest question in my mind and biggest opportunity I see in the market is the relentless market expansion in last 5 years, where demat accounts went from 40 million to 190 million as of last month. And my sense is it is going to go from 190 million to maybe 300, 400 millions in years to come. Now, this has led to market expansion of unprecedented fashion in last, say, 4-5 years. I mean, we have seen expansion in the last 25 years also, but the pace of last 5 years is very different. My sense is this is a change environment and change opportunity for capital markets in India, not only for last 5 years, but next 5 to 10 years. What's your view on that?
No, absolutely, Raamdeo ji. And I was seeing the headline behind market mayhem, and just behind Prashant, I saw a very big screen saying market mayhem, and takes me back in time 5 years. So Nifty touched an all-time high of 12,000 in February 20, and within few weeks we were down to 7,500 or so. And it looked like an end of the world. I mean, the demand and supply shock we saw in that year, and then 21 was the second wave, 22 was Russia-Ukraine war, inflation and interest rates in the developed markets touching new highs, so on and so forth. And despite all of that, I think markets have done very well. Of course, a year back, everybody was saying, all of us, Raamdeo ji, we were discussing that looking at the valuations, a correction is imminent. And we have seen that in last 4 or 5 months. Variety of reasons have led to that. But I think as valuations correct, the structural story hasn't really changed. And coming to your point on the financialization of savings, I maintain that we are at the early stage of financialization of savings in India. This nation is transforming from a nation of savers to a nation of investors, transforming from a nation of savers to a nation of investors, and we have a long way to go. Of course, there would be some cycles. Flows would slow down a bit, given the way markets have been over the last few months. We might see some cyclical slowdown, even as you were talking about the new demat accounts, trading activity, volumes, etc. But the structural trend of investors putting more money for long-term investing in a disciplined manner, I think that will continue for a very, very long time to come.
Navneet, just a hypothesis, right? And it's yours to respond to. We have an explosion, as Raamdeo was pointing about, 19 crore demat accounts, etc. The returns from 2019 to the top in 2024 were extraordinary. So the long-term 25-year return is about 12-13%. But in this period, 2019 to 24, it ran upwards of 25, 22, 23, 25%. I have the exact numbers here. So one can argue that those are essentially the returns, extraordinary returns, excess returns, if I can use that term, is what got this huge flow of retail investors who would not otherwise have come into the market. So if that excess return now goes back and we go back to that normalized kind of return, 12, 13, 14%, will, and I hope they do, will retail investors stay in the market? And are you already seeing any evidence to support this or sort of counter this? Go on.
No, maybe there could be a part of market where the expectations were very high, but our communication from asset management industry has been to keep moderate expectations, and when valuations are high, of course, we are borrowing from the future returns, and that is what our fund managers were communicating a year back, particularly in segments of the market where there was froth emerging. And with this correction, at some point in time, as valuations correct, I think the long-term investors will not be disappointed investing in India. I can just give you one number that my sense is the numbers that I look at, the February SIP number would be higher than February 25 SIP number would be higher than February 24 a year later, despite 5 or 6 months of severe correction in the market and tremendous volatility in the market. My sense as of now is that even the net flows are likely to be higher. SIP flows could be substantially higher than where they were a year back. And this is very important to know that over the last 5 or 6 months, investors have seen a lot of volatility, but a good number of them are still keeping resilience and continue to invest with a long-term view.
That's good to hear. Raamdeo ji, same question to you.
What is that?
The excess return, bringing excess investors in that sense.
Yeah.
Right? The jump has been phenomenal.
Yes,
But
clearly.
they were there for the excess.
Yeah, it's a good question. But if you see the longer term return, it's about 12 to 14%. Even today, if you see don't go in deeper into the index. If you look at just the Nifty is 97% up 5 years on. If you look at 5 years exit, it was just about pre-COVID. February 20th or something, it was all-time high at that point of time. From there, index is up 95, 96%. So it's running that 14, 15%. It's not that very excessive, but yes, in between from that 8,500, it looked very good.
Correct.
I mean, it was almost like a 3x in 4-5 years. So it was extraordinary return. And that must have also attracted some more confident flow into the market. But, you have to also look at from the fixed income point of view. What are they moving from? They are moving from 5% to 15%, or maybe 5% to 12, 30%. So at 5%, it takes 15 years to double. At 13, 14%, it takes maybe 5.5 or 6 years to double. So that equation, now people have understood. And this mutual fund, sahi hai. I think the campaign is so good. I mean, I was saying yesterday in the cricket that mutual fund, now they're talking about the guys are getting scared, so they're addressing to that problem also. That you must remain invested. Don't break it now. This is the time you got to bring confidence and patience in your SIP investing thought process. So I think as an industry, apart from digital infrastructure, even the campaigning and hand-holding digitally is happening big way. And I think we are underinvested as a country into the equities, because your country will be built by your equities. And if you don't keep supplying that equity, it is not going to work out. So clearly, what you are saying, as the earnings, the returns slow down, there will be slowdown in demat accumulation, and there will be slowdown somewhat in the flow also. But that will be very temporary, because as the bottom is hit, again that same journey will start.
And as Navneet said, I mean, I think you can also attest that point that Feb 25 SIP flows actually are higher. Even net flows perhaps will be higher, even though 5 months now the market has not done anything, it's gone down. So,
so those things happen in the sense that it cannot happen that on the top of the market your flow, number of demats will be top. In fact, that top flow and top demat actually takes the market to the higher level. And as the market corrects, those things also slow down. But then journey is very long. That is the faith we have, that it is headed for 300, 400 million demat accounts and relentless expansion of the equity market deeper into the... I think today NSE chief has said that there is hardly 10 or 15 pin codes where there is no investor. But at least there are 15 pin codes still left where there is no investor. So there is still a lot to happen. How do you see the AUM, which is about, say, 40 lakhs in equity, maybe 68, 70 lakhs overall AUM for the mutual fund industry? I'm more on top of the equity part of it. Equity part grows two ways, mark to market and flow. So in recent times, it has grown at more than 25% types, like maybe 22, 23% compounded AUM growth must have happened. So how do you see industry from, say, current 40 lakhs in next 10 years out? Do you see it going to 300 to 400 lakh crores equity? And hence, all the associated industries, whether depositories, whether it is exchanges, brokers, everybody will thrive with that.
So Raamdeo, in last couple of months, investors have clearly realized that professional fund managers have done better than what has happened to their own portfolios. The correction that has happened in many stocks which were chased by individual investors versus the fall in NAV, I mean, you can see the stark difference. And structurally, over the next 10 years or 20 years, I've always give an example of, you can go back and see the asset management industry, the size of it in 1980s in the United States, and from couple of $1 billion, they've all reached trillions of dollars. In next 20, 30 years, as we move from 4 trillion to 30, 40 trillion dollars, I think you will see the assets of asset managers like us growing in that direction.
Navneet, both of you also run AMCs. Obviously you run AMCs and you do more. But as investors, Raamdeo ji, in the capital market space, what is the, from a long term, I'm not asking for recommendation or anything, which piece of the capital market chain is the most sticky, most durable? to play this longer upswing?
I think it is not like in lending, you need capital to lend, and the stress comes through your balance sheet. In asset management, it's a very asset light. It's more intellectually driven. So
It's non-linear. The growth is non-linear.
It is exponential. The cash flow is very exponential. So whether it is asset management, whether it is private equity, whether it is broking, wealth management, they're all extremely asset light. So when you have 300, 400 lakh crores, see if you look at 10 years out, 300, 400 lakh crores of asset management, at least 50% will be private equity, another one. So another 100, 150 lakh crores of private equity. Then you are talking about wealth management, which will be multiple of all this, because all the asset classes will converge in wealth management. So that will be running into maybe another 400, 500 lakh crores. So the opportunity size for anywhere, and then the company has to be good at what they're doing. See, like Amit's company is fantastic asset management company. So if you want to buy into, so you have to buy little all over. Even the so there are 6, 7, 8 segments in capital
market space.
Yeah. And they are highly, exchanges ultimately, where, it's a monopoly and these beasts, they live for very long. So it's a very longevity opportunity. A lot of these other companies, industrial companies and all, they are maybe 3 years opportunity, 5-year window. But these are monopolistic and they're 20, 30, 40, maybe 100-year window. So your multiples will be different, altogether different.
And valuations are reasonable now in this space?
Yes.
For AMCs, you
selectively,
think?
yes. Yes, currently they have corrected.
Well, it's a wrap from Reema, me, everyone on the team who put this show together. Thank you very much for watching, but regular programming resumes in just a bit after this quick commercial break.